Volume weighted average price, or VWAP, is a pro trading indicator that gives true insight into where traders are actually placing their bets and can give you and I the info we need to place ours. Hey guys, James here. In this video, I'm going to show you how I used to trade using VWAP when I was broking. Clients would often ask me, where is the trade? And what they actually mean is, what price level is the most trade occurring at? With the VWAP, we can get a clear picture of not just what the price is now, but actually where the most volume is trading at certain price levels. And that's going to tell us much more about where the price can go next and potentially help us with our own trades. Do check out the timestamps in the description if you do need them, and all of the other helpful videos and tutorials that I mentioned in this video will be listed in there as well. Firstly, if you want to use any of the tools that I'm using in this video or the tools that I use to trade, go to moneyzg.co/tools and see all of the offers, discounts, and tools that I have on offer on that page. So let's get into VWAP. VWAP stands for volume weighted average price. It is an indicator that we can use to tell us a lot of info about actually where the trading is in the market right now. It is kind of similar to moving average, but actually it is a completely different calculation. The calculation specifically for the volume weighted average price is the price plus the volume in the asset that you're trading. We're going to be looking at Ethereum. Actually, it works for Bitcoin, it works for cryptos, stocks, anything where you can have a price and a volume traded, pretty much any market, and then you divide that by the volume. So that's really different to a simple moving average, even an exponential moving average. They will not take into account something super important, which is volume. So when you are a trader or a broker, actually volume is extremely important to everyone in the market. And it is something that professional traders will look at a lot more than retail traders. So if you use the VWAP and you actually look at volume, you're going to be a step ahead already. So we use actually VWAP as a trend confirmation tool, and brokers will use VWAP when trading. When they have big client orders, brokers will actually try and beat the VWAP. What that means is that they get a better price for their client than the VWAP, or the volume weighted average price. That is the average price in the entire market based on the volume traded. Something to note about the VWAP though, really important, is that it's recalculated every day. So you can't use this over a long period. So really it is for day trading, and that is what we are going to specifically use it for in the examples that I'm going to show you. Just like other signals though, we can use it as a buy or sell trigger. So we're going to be looking at a few of those. And you will actually see as well that VWAP really does give us a totally different level of support and resistance than other traditional indicators like the simple moving average. We are also going to be looking at something called the VWAP cross, and we can use this as some potential triggers and some day trades for us. So just really simply, a lot of traders will say that if the trade that is the actual price of an asset, so you can see this option right here. This is actually Ethereum. You can see a blue line in the middle right here. So this is the volume weighted average price. Underneath it, we have the 200 period moving average. So you can see how different they are in terms of the levels they get you. A lot of traders will say that if the trade is above the VWAP, then that's bullish. Well, of course it is, because if the actual price is above the volume weighted average price beforehand, that is telling us that the current trade in that asset is obviously to the upside. A lot of buyers are coming in, completely the opposite to the downside, of course. And you can definitely see price actually goes through and crosses through the volume weighted average price way before it goes through the 200 period moving average. So potentially we can use VWAP to get entry signals and trade signals before using something similar and more simple like the simple moving average here. It depends who you are as a trader. If you are a buyer and you want to accumulate, then you may actually want to wait until the price is under the VWAP, because then the price of your asset is obviously historically cheaper than what the trade has been in that asset previously. So if you are a long-term accumulator, you might want to look when the price is below the VWAP. There are a lot of different ways you can trade around the VWAP. It depends who you are as a trader, but let's get into some specific examples and we can see exactly how we can go about this. So the first one is the long cross, otherwise known as the bullish cross. We'll have a look at the chart, but firstly, this is how you should be thinking about it and some of the indicators that you might want to use. Firstly, we have to use VWAP with candlestick entry triggers. This is going to be the actual entry trigger for our trade. If you don't know about candlesticks, I'll leave a very simple tutorial in the description for you, so you can go ahead and learn about all the different patterns and entry triggers that candlesticks give us. What we're going to look at though is the trend on the 5-minute chart. Remember I said that VWAP is a day trading indicator. It changes daily, so we have to be using a short time frame here. If you are looking to go long an asset, so Bitcoin or Ethereum, we're going to be looking at Ethereum. You might want to see that the actual price itself is below the 200 period EMA. That could potentially signal that it's cheap. It also could potentially signal that the price is actually in a downtrend. So we have to look at other areas of support and resistance as well. So like you can see here, look for strong support below the VWAP. If that strong support isn't there, then potentially that would not be a good long indicator and bullish indicator. We'll look at the chart in particular though. What we want to do with the long cross trade though is look for essentially a price to be moving from below the VWAP up into the VWAP or through the VWAP, and that is going to be the trade that we have. So buying low and then selling on that cross. We can identify that price action, and then when you do enter a day trade, of course, you are going to need to put a stop loss in there. There are many ways that you can use a stop loss. You can either use an indicator called the ATR. If you don't know what the ATR is, I will link other videos below for you. Or you can use other levels that you may look at as areas of support and place your stop that way. So let's look at this potential setup then, and we're actually looking at the Ethereum chart against US dollar tether. We're looking at the 5-minute chart right here. Like I said, we are day trading right now. So what you can definitely see is a line of support, and I've drawn that here in blue. What we also see with this blue line right here tracking is the volume weighted average price. It's going to be so much different to a moving average, and that means we get some really different indicators for our triggers. So what I'm using here is a bullish cross. I can definitely see a line of support for the price. So we're already in this kind of uptrend right here. You can see the price really moving up out here. Very difficult to trade when the price is moving so much ahead of the VWAP, because you're always thinking, is there going to be a pullback? And actually there was. Definitely could have traded up here. Difficult. We get the pullback, and then we see 1, 2, and 3 areas of support. So you can see this area here, and this is where I would look to trade. We're seeing a really strong level of support in the price, and that means that sellers are coming in, but right down here at this price at around 26.70, they just cannot force it any lower. And so that's really good for me entering into a day trade, because it tells me that this level is quite a strong level of support. So I can set my stop loss around just below it, maybe 27.50, 27.40. And then that will give me a fairly small level of risk for a potential upside. And what I'm looking for is for the price to bounce off this level of support and then go through the VWAP signal line, which is this blue line in the middle. And then when it does move through that, that is really my trigger to exit a day trade. So you can see right here, 1 and 2 levels of very strong support. And you can see the price cannot move underneath this. What I also need to use for my entry trigger, my entry is a candlestick pattern, and you can see that actually it happened once here, a really strong bullish candlestick. I'm not going to go into candlesticks, but this is a bullish engulfing, so very, very bullish, and it went up. It actually came back down to this price level though, so you've got to have some diamond hands for this short period. It did test this level again, a couple of more very bullish candlesticks to the upside, so really good, potentially 2 entry points right here. I'm looking just to move through the VWAP, and then when it does and when it has that small breakout, just take my profits up around this level. If you want to try and ride the winner even further and not take profits up here, you can see it does come down, but it actually meets a even higher level of support, which again is a fairly bullish signal. So if you actually do hold it longer, you can either take a profit right here or wait for this and see if it actually bounces again. It does bounce again, and then you can actually have an even higher exit up here. It's really up to you as a trader and where you would want to sell out, but 2 very easy sellout points right here. And this trade, even with what I would consider to be a pretty low risk considering the level of support here, these exit points, you're looking at about 2.5% for a day trade with this Ethereum chart. Let's move on to the next bullish cross. So we're in the same strategy. You can see I've put areas of support and resistance up on the chart right now. So what I'm doing for this bullish cross again is looking for a very strong area of support in the price, and that's definitely given to us right here. So you have a big sell-off, but support was met at this price, and you can actually see the sell-off occurred once more, and then it did meet a lot of support around this price as well. So we have, about 5 sessions right here. They're each 5 minutes. It's the same chart, the Ethereum chart, but we are looking at a really good level of support right here and some very bullish candlesticks bullish engulfing, huge move to the upside. So potentially a great area to get in. You can see the black line or just below I would set as my stop loss. I'm looking for a move through the VWAP, like I said, a bullish cross. But with this one, I'm slightly reticent because we do have quite a strong level of resistance up here. So what you can really see is I'm not probably looking for the price to go any further than this, but I do want to get in around this level. So around 2660, 2650, depending on where you want to get in. And I want to just move it through the VWAP and then try and exit at some point. I could have exited right here, and actually within about 45 minutes or under an hour, I could have made a very tidy profit on that move. It was a very good move for us, and it did actually meet resistance up at this level. When this happens, there could be a few different outcomes. Either it meets resistance and then falls back off, or it will test the resistance once more and potentially just break through that resistance and go to a much higher level. And that's what it does here. It kind of tests it again, and then you can see it just breaks through that resistance, goes much higher. Obviously, the longer you hold a position, the more risk that you have. And you can see the time down here. This is 9 a.m. in the morning, so a perfect time to be getting in, just waking up, entering your trades. We're getting to about 6 o'clock, 8 o'clock in the evening right here. This is when trade gets a little bit difficult to analyze because volumes start dropping. So potentially you would have had a great upside if you would have held it, but the risks are increased. And so I would suggest most traders would probably just get out here or on the second timeline. In any case, this was a great trade, and this one is around 2.5% again for this trade, depending on where you got out. But let's look at another type of setup, which is the short setup. So can we also trade to the short side, or at least not get in and get stuck going long at a high price when the potential is for the price to fall? So we're going to be essentially doing the same thing, but just reversing it. So we're going to be looking at candlestick entry triggers once more. We're also going to be looking at the 5-minute chart. You might want to also use a 200 period simple moving average or exponential moving average, just to give you another point of reference. You don't have to, but you can do if you want. And what we're going to be looking for is a sell-off through the VWAP. So before we were looking really at a level of strong support, buying that and trying to move up through the VWAP. We're going to reverse that and see when the price is actually trading above the VWAP, is it good to get in, or should we just not go in or potentially sell short? Again, we can use those stop losses. So here is a chart with 3 price levels that I can see, or areas of value. So we have the top area of value right here, which is definitely resistance. We have the price testing it once and then the price testing it again. So for the second time, when you're seeing this actually live, traders often look for a second or a third test of an area of support resistance. So when you are looking at the chart, you see the price test once this area, and when it tests for the second time and doesn't break through, you're thinking, okay, it's tested for the second time, maybe it's just not going to break through, and potentially it's going to actually bounce from this area of resistance and go to the downside. We also see another area of resistance up here, and we can see 1, 2, 3 times it tested this and didn't break through. Now for support, we definitely have a line of support right here. So the price actually bounced down. Then we have this support and the price moving back up. These 3 areas and lines that I've drawn are really key. So what I've drawn right now, you can see this green line. This would be known as a consolidation phase. You can see the price isn't really moving too much. It's just kind of bouncing up and down in a range bound way. And the volume weighted average price, of course, is in the middle, and it's not changing a lot because the volume is fairly even throughout the day right now. And so the average price isn't really changing too much to the up or downside. Traders, though, will look for consolidation to place a bet either going to the upside or downside. You can see that right here, it does meet support, but it is actually capped off right at the VWAP. So it's actually meeting a level of mini resistance at the VWAP. Now, potentially this could signal a breakout of the consolidation. And in fact, if you were bullish and you said, you know what, I have areas of support right here, I'm actually just going to go and trade a long cross trade and essentially get in and try and bet that the price will go up through the VWAP. And actually, you would have been successful on this occasion. You would have got in at around 2750 and potentially got out some level up here around 2800, 2810. But remember, when you are trading live, this area of resistance would probably not be clear to you. It is therefore a bit of a guessing game and a slightly higher risk trade, although the downside is fairly limited, putting a stop loss in around 2730 because we have this area of support right here. So potentially a long cross, but I'm more interested in the second test of this resistance right here. When you're looking at the chart live, you will see the price moving up once, coming down, and then again testing it. Remember, the price now is way above the volume weighted average price. And so for me, the probability of a massive break to the upside is fairly low, although of course there are market factors and news that may come out that do that. But purely from a technical standpoint, this could be an area right here that I'm saying, yes, this is some resistance, and potentially you could see a move to the downside, or at least a testing of the volume weighted average price again. We also have this resistance right here, which has 3 areas. You can see the resistance really is quite strong. So potentially what this is telling me is that moves to the upside are just being thwarted, and I'm looking for a short crossover through the VWAP, or at least into the VWAP. So potentially entering a trade up at this resistance level and then going through the VWAP into the next area of value, which would either be the VWAP itself or the next level of support and resistance, which is down at 2740, 2750. And what I would use for this trade, of course, is those candlesticks. Like you can see some very bearish candlesticks right here for our entry trigger. So getting in around about 2820, selling short, buying back at 2740, or at the very least, not entering into your trades. This trade, around 2820 getting in, seeing it down through the VWAP is a profit of around 3% or so if you are shorting Ethereum at this time. So the next way you can use VWAP, actually not day trading, but for accumulating. If you are someone that wants to accumulate a cryptocurrency, whether that be Bitcoin or Ethereum, Cardano, Polkadot, any currency that you choose, even for stocks, you can't do much better than beating the VWAP for the day. So if you get a price, let's say you're going long and you're accumulating and you're buying, if the average price that you got for your Bitcoin or your Ethereum is lower than the rest of the market, you have done well for that day. You have beaten the VWAP, and you can't really do much more than that. So if you're accumulating or dollar cost averaging, that is obviously one strategy for the long term. On a daily basis, when you're entering your trades, if you can beat the VWAP, you have done extremely well. So definitely you can use this with dollar cost averaging, where DCA is the macro investment strategy that you want to use on a daily basis. When you're actually trying to get the best prices, then you can go and try and beat the VWAP. And obviously you don't want to be buying when prices are above the VWAP, because essentially what you're doing is buying something that is comparatively more expensive than most people have bought and sold it for on that day. So we can see the VWAP over a much longer period. Like I said, the VWAP gets rebalanced at the start of every day. So you can't really use it for the long term, but you can see every day you do get these rebalances, but for sure there are areas in the chart where you can potentially enter. So down here, this sell-off, you can see the price is below the VWAP right here. You don't want to be buying up here because the price is way higher than VWAP. You can enter at this level once more. You can enter at this level right here, and also down here. So potentially you are saving yourself randomly going in and dollar cost averaging at random times. You can be slightly more systematic about it and say, I'm not just dollar cost averaging, I'm also only purchasing when the price is below the volume weighted average price. I want to buy at a price that is lower than other people have bought on that day. Doesn't always work out. Prices can appear very low. For example, on this day, it appeared very low. You would have beaten the VWAP. It would have been better to just wait and get more at this level, but that is of course not what dollar cost averaging is. If you want to know what DCA is, then I'll leave a link in the description to a video. But using the VWAP is for sure something that brokers do to try and beat the market and at least get a better price than most other people in the market for that day. Coming on to the recap of using the volume weighted average price then, it's not a panacea. You do have to look for other areas of support and resistance around the price, and then use the VWAP line itself as an area that tells you where the trade is. So look for potential crosses. Can you buy low and then sell on the cross through, or sell high and then sell when the price crosses through the VWAP? Or can you just use it as a reference price to accumulate some Bitcoin or some other cryptos over the long term and potentially get a better price overall than the rest of the market? VWAP does have a lot of downsides though. It can be influenced by large trades. So if you have a lot of large trades at a certain price, then obviously the VWAP will go there because it is volume weighted. VWAP does only work intraday as well. So don't hold overnight because the VWAP is going to get rebalanced. That's especially for stocks that actually close A little bit different for cryptocurrencies because they trade 24/7. But as you can see from the charts that we've looked at, there are some rebalancings at certain times as well. So really you just have to look at VWAP on a day-to-day basis. And of course it cannot predict the future and can show us many false areas of support and resistance. Plus everything goes out the window if a tweet from Elon Musk comes out or a bit of stupid news, then that will obviously just change where the market is. And then technical indicators do go out the window. Do check the description though for way more helpful videos if you need anything more explained. Also do check out the trading tools that I use. Go to my website moneyzg.co/tools. Do subscribe for daily helpful crypto content, and I'll see you in the next one.